If you are still struggling with consistency in your trading, here's the truth. You don't need another year of random trades, chasing alerts or blowing up accounts. You have less than 3 months until 2026. The question is, are you going to enter that year as the same frustrated trader or as someone finally consistent and profitable? Most traders confuse winning trades with consistency. Inconsistency comes from the lack of rules, no journaling and revenge trading. People say that 90% of traders quit before 2 years. I actually say it's 2 years and not 6 months because anyone can score a few good trades leading to a false belief of consistency, but at the end, they can't win in the long run because they can't stay disciplined. The first step to find consistency before 2026 is journal everything. This is the first step, and honestly, if you skip this one, nothing else will really work. Every other step I talk about later is built on this. Think of it as the base of the pyramid. If the base isn't solid, the whole structure is going to collapse. Most traders lose track of their progress because they are trading blind. They remember their wins, but they ignore their losses, and they never really understand why they took a trade in the first place. And journaling fixes that. Your journal shouldn't just be screenshots of charts. It needs to capture these three things. The first point that your journal should include is the setup you traded. Was it actually part of your game plan or did you chase something random? Writing this down actually forces honesty. For me, I realized that most of my bad trades weren't even part of my setup at the first place. They were just me forcing something that wasn't there. Once I started journaling this, it became obvious to me that my consistency came from only a few playbook trades that show up maybe once or twice in a week. The second point that you need to journal is your mindset and emotions. This is very important, that why you took a trade, the emotions behind that trade. Were you calm, confident, anxious, or revenge trading? Because a lot of traders, they just journal that, okay, I took this trade because it was breaking a major level. I did not hold on to my winner. But you need to ask the question, why did not you hold on to your winner? Because emotions have fingerprints on every trade you take. Personally, I only trade for the first 1 to 2 hours of market open because the longer I sit in front of my screens, the higher the chances I will take a stupid trade out of boredom. That's also why I completely stay away from 24/7 markets like the crypto markets. And when I started with crypto market, I just went insane checking the charts every 5 minutes, every single day of the week. I had no life outside of the charts when I was trading crypto. So for me, stock market is the best because my emotions are more suited to the stock market. I have a definite clock in and clock out time. I am in front of my setup around 8 a.m. EST. The market opens at 9:30 and usually I'm done by around 11 a.m. to 12 p.m. I still keep a track of the news, the gap ups and the gap downs outside of the market trading hours, but not thinking of actively trading, which is a huge bonus for me. That is the reason. If you're not aware of your emotions and if you don't journal your emotions, you won't know which issues to work on. For me, my issue was revenge trading and over trading. I was just taking boredom setup. So I just give myself 1 or 2 hours of the market open. I am personally a momentum trader and usually the volume dies down after the first 1 to 2 hours of the market open. So the momentum is not there because the volume is not there, and that's when I call it for the day. And now the third point that you need to include in your journal is your mistakes and the fixes, which is also very important because a lot of journals are like, I made this mistake, but how do you fix it? What went wrong? And what's the one thing you will do differently tomorrow? If you have one goal to work towards every single day for the next 2 weeks, and if you just focus on that one mistake and fixing that mistake, you will be able to fix that mistake after the first 2 weeks, and then you look at a different mistake and start working on that. And this is how you stop repeating the same errors. I have learned that writing down the fix is just as important as writing down the mistake. Otherwise, you just end up cataloging your failures without improving, and your journal just feels like a playbook of what not to do, and it's just very depressing to look at your journal because it just reminds you of all your mistakes, because I was at that stage of my life when I started trading. If you do this properly, your journal becomes your own personal trading coach because you make a mistake, but you also have a fix in your journal, and that is why it's your personal trading coach. It shows you your strengths, it exposes your weak spots, and it gives you a blueprint to get better every single day. Without this, you will just keep repeating the same mistakes and calling it experience. I have seen traders make it in this career in like a few months, and others can't even find consistency after a few years. And the reason is they just keep repeating the same mistakes. And now the step 2 to find consistency before 2026, and this is very important, it was game changing for me personally, is master one setup. Most traders fail because they are trying to trade everything at once: breakouts, reversals, scalps, swings, small caps, options, cryptos, futures, you name it, whatever. There are plenty of markets. The problem is every setup has its own rules, psychology, and nuances. If you spread yourself too thin, you never get enough reps to truly master one setup. You can be either master of one or you will be just mediocre at everything. Here's what mastering one setup looks like. I will show you an example. You have to pick your setup. Maybe it's a breakout of a key level, a VWAP reclaim, or a trend reversal. Whatever your strategy is, doesn't matter which one as long as you commit to it. The second step is to study it across 100 plus examples. Pull out the charts, journal them, and see how it behaves in different market conditions. And the good thing is that if you have been trading for a while, you will have your own journal. That's why you need to start maintaining a journal since day one, because you can go back and look at your own journal. And if you're just a beginner trader or you don't have enough experience, you can take a look at the chart of TradingView. You can go on TradingView and there's a replay feature. You can just go back maybe a year and look at the daily chart every single day, look at your strategy, where your strategy is working, and you have to study your strategy. Then the third step is to track your stats. You have to track your win rate, average hour multiple, and drawdown periods. Numbers don't lie. Data will show you whether you have an edge or not. I personally use Tradezilla to keep a track of my stats, and it's very important to see whether you are cutting your losers, because my average hold time for losers is less than a minute and my average hold time for winners is more than 5 minutes. That just means that I am cutting my losers and I'm holding on to my winners, and you won't be aware of this fact if you don't journal your trades. The fourth point is to refine your rules. Entry trigger, stop placement, scaling out. Once these are clear, the setup becomes more repeatable, because for me, I have a lot of rules based on my mistakes, because when I started out trading, I had an issue of taking a trade right at the market open at 9:30 a.m. and I used to lose money, reach my max stop loss within the first 2 minutes of the market open, and I had to call it a day because I had a hard stop loss for the day. But now, if you're trading off the market open, especially as a beginner trader, you don't have any edge because you don't know how to read the tape. Learning to read the tape takes a lot of time and experience. So now I know how to read the tape, but also I have a criteria on my Notion daily journal, which I'm going to show you. So here's my Notion daily journal. So the very first step is that, okay, it's a Monday. So yeah, okay, I set the date. The one thing for me on this day is going to be the mistake from the prior day. Maybe the prior day I overtraded, or maybe I wasn't patient enough. There was no setup of the market open. So depending on the mistake I made the prior day, that is going to be my one thing for the next day. Then before open, do you see any playbook setup? So it's called before open, any playbook setups. If the answer is yes, I'm allowed to trade. If the answer is no, I have to size down, because sometimes size down or not even take a position, because sometimes the answer is no, but maybe after the first 30 minutes, 1 hour of the market open, there's a stock that decides to find a good direction. So it can turn out to be a playbook setup. But ideally, if the answer is no, after open any playbook setup, the answer will be no ideally. But a lot of times what happens is that I don't see a playbook setup of the market open, but later on there's a playbook setup. I can click this as yes. Open exception. This is very important for me because I had an issue of taking a trade right off the market open. So these days, if the answer to this question is no, I'm not allowed to trade off the market open. That just means that, okay, the stock is actually not opening near the major level that I'm watching based on the daily chart, based on the pivot levels, whatever your strategy is. If the answer is no, I'm not allowed to take a position at 9:30 a.m. If the answer is yes, I'm allowed to take a position at 9:30 a.m. So these are my rules. Did you trade? Ideally, now again, if the answer to this question is no, and the answer to this question is no, ideally, the answer to this question should also be no. There was no setup before the open. There was no setup after the open. Did I trade? The answer should be no. But if the answer is yes, I need to find out the underlying emotions. What was the need for me to take a trade when there was no good setup in the market? Because the answer to both these questions was no. So now this is like the green day, red day, green, red, cash day, PNL. Again, the PNL day rating is going to be 1, 2, 3, 4, 5. Mistake. Did I make any mistake? Again, going into the levels, patience, stupid stocks, chicken, like I chickened out from a winner or whatever. So whatever the mistake is, I'm going to focus on that mistake as the one thing for the next day. If you want a copy of this Notion template, there will be a link in the description box below. Simply enter your email and we're going to send out this template for free to you. The only thing I ask in return, because that's how the world works. If I'm giving you this template for free, you should do something for me, right? That's karma. That's good karma. The only thing I ask in return is to like this video and subscribe to this channel for a lot more content on trading. And the one thing I would recommend you guys is to actually modify this template to suit your needs, because this template is modified and it's set up in a way to fix my mistakes. For example, I have an issue of sitting on my hands. That's why I have a question in there. Before open, do you see any playbook setups? If the answer is no, I automatically know that I need to take a back seat, right? So you need to modify this template to suit your trading style, your strategy, your emotions, your mindset, and the mistakes you make in your trading. And one important thing I want to mention is that my journal highlighted one important fact for me, and it was actually shocking to me. I had made almost nothing trading all the random triggers I usually trade because of earnings or whatever that I thought were opportunities. My consistency only came from a few stocks that I can show you. So if you look at my trading view, I have actually removed a lot of stocks. If you look at my trading view right here, I only have these few names: Tesla, Apple, Meta, AMD, Nvidia, Microsoft, Amazon, Netflix, MU, Google sometimes. PLTR is also not a stock that I like to trade often, and that's why it's at the bottom of the list under ETC. And then ARM is actually a good stock. I have made a lot of money on ARM. So out of like most of my money, 98 or 99% of my trading profits for the past 5 years, if you look in the long run, you have to look at your stats. And that's why TradeZilla is really helpful to look at your stats. And then I also have my Notion playbook, which is a bit more manual, suited to my personality and my mistakes. So as per my TradeZilla, I have basically made nothing on all the other stocks except these stocks. These are how many names? If you look at these names, it's going to be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 10 to 11 stocks. Apart from that, I have made almost nothing in the past 5 years on all the other stocks combined. So that just means that, okay, one day I'm trading a stock like Shopify. So I'm going to make money on Shopify, but then I'm going to lose money on Spotify, right? So all these stupid names, I have stopped trading these names because in the long run, in the past 5 years, I have made nothing on all the other stocks combined apart from these 11 names. So if you are serious about being consistent before 2026, stop trying to be everywhere. Always remember this sentence: you can be master of one or mediocre at everything. Stick to your own proven tickers and let the data guide you in the right direction instead of your emotions, because a lot of times I look at a stock that looks really fancy, the shiny object syndrome, but then I just stay away from it because my data shows me that at the end of the day, in the long run, in the past 5 years, I haven't made any money on any other tickers apart from these 11 tickers. Now, step 3 to becoming consistent before 2026 is define risk per trade. Here's where most traders get it wrong. They risk the same amount on every single trade. No matter if it's a random setup they barely understand or a setup they have seen work hundreds of times with exponentially high risk to reward. That's not how consistency is built. Your journal is more than just a diary. It's a map. When you look back at it, you will notice a pattern. Some setups consistently pay you a lot more than other setups, and that's your edge right there. And once you find it, you need to treat those setups differently. There's no point taking the same amount of risk on 2 different setups, and one is a playbook setup and one is a C- setup. Your risk should be higher on the playbook setups. You have proven in your journal that those are the trades where your edge lies, the ones you can back up with data and not hope. And when you size up on these right setups, trading completely changes for you. That's when your account starts to grow exponentially towards the upside, and that's what happens with a lot of consistent traders. They first see slow growth, and once you have a strategy dialed in, your growth is going to be exponential, followed by a period of stagnation, and then again exponential growth. That is the equity curve of most of the consistent traders I know. And now here's a framework for the dynamic risk. You need to have your baseline risk. Decide on a default % of your account you will risk on every trade, something small enough to survive the bad days, because you need to have a strict stop loss. Like, okay, if you have a $5,000 account, maximum you can lose $100 a day, right? You need to have that set, especially as a beginner trader. Now, playbook boost, that is what I call the playbook setups, and that's when you increase your size on the playbook setups. But as a beginner trader, you need to keep your risk consistent because you don't know what a playbook setup is. But once you start working on your playbook, you need to slowly increase the risk on those playbook setups. When the trade matches one of your proven journal setups, that's when you allow yourself to risk more. Maybe it's 1.5 times or 2 times your baseline, whatever fits your comfort level and data. Especially as a beginner trader, it might be on the lower side, 1.5 times or 2 times. And then with experience, once you have a well-defined playbook, you can slowly increase your risk to maybe 5x sometimes, because now these days, if it's not a playbook setup, I might risk like $1,000. But if it's a really good playbook setup, I might even risk $20,000. That is 20x the risk on my stupid trade. And that is what comes with experience, because you have such a well-defined playbook and you have such confidence on your playbook that you can increase your risk exponentially on that setup. And finally, you need to cut your risk on noise. That is the bad setups. If it's not in your playbook, keep risk small or just skip it completely, right? It's very difficult to sit on your hands as a trader, but if you do, you're just going to be more consistent in the long run, right? It's very difficult to do, but it's much needed. If you don't see a setup, and that's why I had that Notion template, if I don't see a playbook setup before open, do you see any playbook setup? If the answer is no, then I automatically know in my subconscious mind that, okay, I just need to take a back seat. If I don't see any setup, according to my journal and playbook, if I just don't take anything, zero is better than losing money. So cash is also a position. It's better than losing money. And more than that, it's better than losing your confidence. Because if you take a stupid trade, yes, you lose money on that trade, but you also lose your confidence. And maybe the next day you see a playbook setup, but because of that loss in confidence, you are not able to execute on that playbook setup properly because of the stupid setup you took the prior day. Now, because we are talking about dynamic risk, I want to give you guys an example. So Tesla recently had a weekly range breakout the week starting 8th of September. So on the daily chart, Thursday, Friday, we had crazy push towards the upside. On Friday, I personally missed out on this opportunity because of my internet issues. I actually posted a live trading recap from this day. You guys can check out that video. But the prior day, I actually made $30,000 because I increased my position sizing on this day. It was a weekly range breakout. But now if you compare this breakout to maybe this breakdown, that was a breakdown of 300, which is just a daily range breakout. This is a daily range breakdown and this is a weekly range breakout. If I keep my sizing the same on both the days, it won't grow my account exponentially because this was a daily range breakout and that is a weekly range breakout. So my sizing on the weekly range breakout needs to be exponentially higher than the daily range breakout and exponentially higher than the 5 minutes range breakout. Because if you are just trading a bull flag on the 5 minutes chart and you are willing to risk $10 on that trade, then on a weekly range breakout, you should risk more or maybe not even trade a 5 minutes range bull flag if it's not backed up by a higher time frame setup. That's why higher the time frame, the more risk I'm willing to put in. This simple shift, weighting your risk based on your proven setups, is what separates the gamblers from the consistent traders. You're no longer throwing darts and seeing what sticks. You are betting bigger only when the odds are stacked in your favor, and these are the playbook setups. That's when your trading starts to feel different. You're not hoping anymore, you're executing a plan and your results are gonna reflect your edge. Saying that, thank you for watching. Like this video, subscribe to my channel for a lot more content or trading. And if you guys don't follow me on Instagram, I post a lot of behind the scenes of a trader, my PNL, a lot of good setups on Instagram as well and on Twitter as well, on X. Follow me there. All the links will be in the description box below. Thank you for watching and I will see you guys in the next one.